Yeah, I mean, you can only lose if you're on leverage and you're on the wrong side of that. And so, it's a double-edged sword. It's all great when things are going up. If you're going to play leverage, you have to know what you're doing. And if you're going to do it as a new person participating, then you really need to position very small until you learn the game. With these markets now, we've got so much leverage in the system with the likes of initially BitMEX and now Binance Futures, CME, OKX, all these exchanges doing immense volume. The volume is heavily weighted on the derivative sides. It's very, you'll notice that volatility and you'll notice the shapes change, and you can almost take a guess at how much leverage is in the system by seeing how choppy the price becomes. And when you get this kind of liquidity failure where there's not enough buys and we have hit a liquidation point. This is the second time we've had this in barely over a year. The last one was COVID. The thing just plummeted. And before that was the 2018 bottom near the tail end of 2018. That thing plummeted like we'd never seen before up to that point, like a sheer downward wall, cliff. And, that was the first BitMEX liquidation. That was the first major derivative markets unwinding. And so we've got a lot of unregulated derivative exchanges. I don't know if that's the issue, but it's so easy for anyone to sign up, click, and enjoy 100x plus leverage. What Binance was saying that 60% of traders use more than 20x leverage. So it's really fun and games if you see. It's like a casino, right? And it is I do think it's unhealthy for the long-term picture of Bitcoin, the growth of that, in terms of just the sheer amount of volatility that's added into the market and the fear and the amount of people that are losing their shirts. There's this other side of the story where these derivative markets are creating huge opportunities for, traditional folk who want higher yields, and you can kind of do a market neutral strategy where if you're not interested in Bitcoin, you just want cash, but you want to generate a 20, 30, even 80% return per year, which is unheard of when, cash-free rate on US dollars is 2% or something in normal markets. It's so attractive. They come in here and they have to buy Bitcoin to participate to get that access. So you kind of get this other effect where traditional markets are deploying money into Bitcoin to get access to that yield that's created by the demand for these derivative markets. I think in terms of the long story of Bitcoin, where it's like the currency for the people, it's not so good. Though, I'm kind of glad this happened. It's heartbreaking for some people who lost a lot of money. But in the long-term picture, first off, you've got a billionaire that's gone a little bit AWOL and tweeting weird research that are actually lies if you were to do the deep research on Bitcoin, its energy use, and how the long-term effects of that. That's dropping the market. There's one thing is that the more that happens, the less the market will respond to it. The other thing that happened with this one in particular was the people who were most scared, and the reason why the markets dropped so much this time was these guys that sold their coins. They were new participants. They have only held their coins a very short amount of time. Secondly, they were very high net worth individuals. So they're very rich Bitcoiners coming in from really rich people, full stop, coming into Bitcoin, holding whale-sized quantities of Bitcoin, which creates a new concentration of wealth. Now, what happened was they were the ones that sold. So we've had the value that's being held by whales drop. And the people that have been buying it has been small retail. The growth of coins being held by below 1 Bitcoin in holdings has been climbing unperturbed. And actually the user count, as Elon was tweeting, and as price was dropping, people were getting in, maybe from the publicity, but we got an uptick of users arriving the first time as seen on the network. And it kept climbing as the price was wicking downwards. So the publicity got out there. Maybe there were people on the sidelines thinking, well, it's run away, it's getting too expensive, and now it's coming back, and they bought the fear, and they bought the dip, and this was retail. Yeah, I think there's still a lot of education to be done. I note that the ones that bought into the FUD were most likely these whales that they saw a like, what was it? They saw maybe a 2x to 5x of easy profit, which is very, very unheard of in traditional markets without leverage. And I think that was enough to scare them out and to take the profit. We're now in this situation where there's no more profit on the table transacting between the sellers and the buyers. So anyone selling right now is, well, not anyone, but the market in general is selling at a loss. So that's going to be really hard to sustain, given all the key market macro indicators are bullish. We've got the uptick of new users. They don't care. They're coming on in. They like buying Bitcoin cheap. The valuation right now, I'm reading around the 55,000 mark based on what kind of volume going through the network, people buying this. What else? They're like the MVT ratio, which is a nice macro market indicator, says this is no buy zone. There's an immense amount of activity in the network between investors compared to the valuation. We haven't seen any kind of mania. Like, we dumped down from a level which was highly organic, no speculative premium. 2017 top, for example, we were, I think, 3.8% higher than the organic valuation. So, you know, this is not a mania phase and then the end of the bear market. This is just a middle of the bull market derivatives unwind. So we've got a lot of cheap coins sitting here in the market. I think it'll take a bit of time to recover. Just from the sheer amount of coins that we dumped out, it'll take time to reaccumulate. I think ultimately, if you look at the network health, this is a good thing.